In this video, let's talk about REITs once again. How do you know if that REIT is worth investing? What are the things that you need to consider for you to figure out that you can put your money in this? And this REIT will be something that will be good for a long period of time. So if you want to know more about REITs and you want to invest massively in REITs this 2021, then you have to check this video out. Hi everyone, so we have new REIT listings happening in the next few days, and we will have more across the year. I really believe that's because of the very successful listing that we had for a REIT which happened last year, and I think it was a template that people and other companies were watching. Will this be something that's successful? Because if it will be preceded for more and more REITs that will possibly happen, and that's why we're seeing the possibility of I think Robinsons, SM coming into the mix and doing their own REIT, and then we're seeing also Double Dragon over the next few days. And I just want to share one of the reasons why I love investing in REITs, and even way before there was REITs in the Philippines, why I started investing. And I think I want to share also some of the principles that I've learned along the way, and some of the things that I look for when I start investing in REITs. So just to backtrack, one of the first REITs that I invested in was a data center which was in Singapore, and my ideology there when I was looking at it is, number one, if I invest in a data center, I think the income from that will be relatively predictable. Because think about it, data centers, when people lease out properties like that, they're very long term. But not just long term, the capital that you would put in for that is also very expensive. So meaning, when companies go and lease, they're not leaving in 3 months, they're not leaving in 6 months, but they would be there for a long period of time. So isipin nyo to, REITs are corporations and REITs are businesses. At the end of the day, people who run business, they want predictability ng income nila. They want that if they could get a contract that's long term, they would want that. That's what I saw on the first investments that I got connected to it, because it was highly predictable. But not just that, I saw that the future is technology. The more dependent we are on the internet, the greater the need for data centers will be. So those were the two primary reasons on why I looked into it. I also looked at who the management of the company was, who the owners were. Did they have a reputable brand? Was it something that was in their previous businesses, in their previous undertakings? How were they in managing what they had? What was their experience already in the property development space? And I guess I'll relate that also to a REIT, because if you backtrack and also look at what a REIT is, a REIT, Ayala has been in the property space for a very long time. They've developed a very good brand. They're very reputable in how they have conducted and how they have also done their, I think, their dealings. And a brand is a representation of the value that they have given. So I think that's what a REIT also brought to the table. And that's also a suggestion I could give to all of you, for the next listings that will come in, not just for 2021 but also for the future. Look at who is listing. Look at their track record, look at their reputation, look at how they handled their previous projects also, and look at how have they managed their current buildings. Is it well maintained? How are their tenants? How is it faring? Because those are the important things that you have to look at, because at the end of the day, when you invest in a REIT, totoo, it's highly connected to real estate. It's you're earning off of rentals, but at the end of the day, they're corporations, they're businesses, they have to be well run. It also goes to show that maybe you have to look at who the CEO is, you have to look at who the executive team is. Then I highly suggest also that regardless of what type of REIT is being listed, you look at how's a company making money, or where's the exposure into. Everyone knows that when it's REITs, it's rental income, but saan nagagaling yung rental income? Hotel ba yan? Data center ba yan? Office ba yan? Retail space ba yan? Because REITs can be so broad. REITs can span so many things. You have to look at ano talaga yung pinagkakakitaan ng negosyo, pinagkakakitaan nila ng rental. Then, as you start to look at it, who are they catering to? Are they catering, at least in the Philippine context, or are they catering to the BPO industry, which has contributed billions in the Philippines? Are they catering it to POGOs? What's the special dynamic that this REIT has that I know they will have repetitive customers, and I know that it is in a growth industry? So you have to ask those questions if you want to start investing in REITs and you want it to be something that's somehow sustainable for the long term. After looking at who are they catering it to, what are majority of their tenants, you start drilling down the tenants that they have. Gano'ng katagal yung leases? These are all disclosed naman, so you can look at it. What are the average leases? Are they just a year? Is it less than a year? Is it 3 years? Is it 5 years? And what you want to look for are leases that are pegged for a long period of time. The longer the lease, the better, because the more predictable the income will be. Please remember this, a majority of the people who enter into REITs are there for the predictability of income, primarily because it's real estate, it's rental. So the longer the lease, the better. And maybe the next thing that you would look at is yung occupancy rate. The closer they are to 100%, the better. The closer they are na halos puno sila, tapos long-term yung contracts, the better also. And the next thing that you could look at also is, tignan mo, gaano kahirap for tenants to actually go. Gaano kahirap for tenants to leave? Are there penalties? Or is it more attractive for them to transfer elsewhere? I guess you could also look at, saan nakasituate yung REIT, yung buildings. You also have to know, is it in an area that's emerging? Is it in an area where the population is young, dynamic, still growing, and has a potential to grow even more? The main dynamic for a REIT, basically rental. Kung maganda yung lugar, kung nasaan yung REIT, it's growing, it has a dynamic population, business is booming, then it's easy for them to raise rates over a stretch period of time. As property prices go higher, or if there's a large demand dun sa place na yun na madaming gustong umupa, it's easier for them to command and raise rates. And as they raise rates, as you all know, it raises the income, and as it raises the income, the dividends that you will possibly get go higher. Then, I think, another thing that you could also look at is this, the synergy that the business has, the REIT has, to other companies that are owned most likely by that mother company that's selling. So, meron bang synergy across the board that will further bring traffic to the building? Because the larger the traffic to the area, people flow, it's easier to surround it also with retail establishments, putting retail establishments there, and then condos there. And then when you have all of that together working in that place, you would see property prices go higher. And again, as property prices go higher, rental rates will also follow. Or as property prices go higher, it's easy for rental rates to go higher. Or baliktad, rental rates go higher, it's easier also for property prices to go higher. So another thing that I want you guys to see when it comes to REITs, when they do the listing, what are their plans for the money? What will they use for the money that they would get? Please remember, every time a company lists in the market via REIT, they would receive a large amount of money. And it would be interesting to know what will they use the proceeds for. And similar to a REIT, if you followed the narrative, they used it to buy another property which they added to their portfolio. Again, adding more properties that are of good quality, that would undergo all of the questions that I said a while ago, that will go a very, very long way also in increasing the earnings. Purchasing more properties that are good could give more income to the REIT. As it gives more income to the REIT, it also increases the chance that your dividends also will go higher. So yun, look at the strategy. When they list, are they just keeping and maintaining the number of buildings that they have, or they plan to increase it? Just to put a REIT again in the forefront, as siya naman talaga yung naunang REIT, and by the time we're making this video, we only have one REIT so far. They started out with 3 buildings, then got one in Cebu, then got another one in Ortigas, then got another one in the Techno Park. So they suddenly doubled what they had already as compared to where they were when they started to list. Also, equally important that you also need to know magkano yung dividends. how can you make it fit? And of course, you cannot control the dividends that the company is giving, but you can control the ability of when you start to buy. And since majority of you who are watching this are into REITs to get the dividends, so the name of the game if you're into REITs is, how do you enter when the price is low? The lower you buy the REIT, the lower you buy the stock, the higher your dividend yield will be. Been getting a lot of messages also because as of the time we're making this video, a REIT is close to 33 pesos already. As you all know, it has gone a great way off from its listing. Then it dropped also. So for those who picked up a REIT when the stock drop a few weeks after its IPO, then you're not just getting a higher dividend yield, you're also getting capital appreciation. So here's the thing, I really believe that REITs will be pretty much determined also by its ability to give out dividends that are high, that are not just high but are also consistent. So if it's giving you dividends that are high and consistent, the ball is in your court already to practice and analyze and time what price are you supposed to buy it so that you get your dividend yield that's attractive for you. So the higher you go, above 5%, the better it will be for you. Please remember this also, in the Philippine setting, you can get dividends from Globe, from Meralco, from PLDT that are higher. You can also get it from SPC. So you're comparing it that if you're after the yield, you have to be sensitive at what price you buy it. I really believe it's a very, very good investment for people who want exposure to real estate, who want to earn via dividends, and also who want to have the ability to have that predictability. So just to reiterate and just to summarize, I guess, bits and pieces of what I said, look for the management, how good they are, look at how the company's making money, look at the tenants, how long are the tenants, what's the quality of the tenants also, is the buildings exposed to an area that's dynamic and growing, so they have the ability later on to continually raise rents also. Then aside from raising rents, look at the occupancy of the tenants, how fully occupied the buildings are. Then lastly, look at their ability to give you predictable dividends, because the more predictable they are, the better. And focus on what you can control. You cannot control how high they give their dividends, but you can only control your ability to buy it when it's lower. And sometimes a lot of people don't want to buy it when it's lower because it's scary. And totoo naman, we all get emotional when we see stocks go down. And it's counterintuitive. When the market is low, a lot of people don't want to buy because it's scary, because there's uncertainty. And I remember the interview that we had with DM Wenceslao, CEO, that it was so interesting. It fit to what I believe in. Maximum uncertainty, maximum risk, maximum upside. So that's what it is also. No? If you know what you're getting into, sometimes when it's at its scariest, that's the best time for you also to position and to invest. So there, if you want a cheaper alternative on how you can have exposure to real estate na super liquid pa that you can sell anytime you want, that's faster than buying your own condo or buying your own property, I really believe REITs are the way to go. I have so much videos about it. It's popping here that you can watch to know more about. No matter how much I talk about it, please don't just buy REITs just because it's discussed here. Please take the time to learn. Please take the time to study. Please take the time to build your skills in knowing what it is. And at the end of the day, it would be good to start 2021 planting seeds at the ground. Kasi sayang if you don't invest what you have right now, you won't be able not just to have the experience to make money from it, you will miss the exposure of having a chance also to grow and put the seed on the ground, so that 5, 10, 15, 20 years later, you would experience the benefits of it. And the reason why I'm sharing this is because it's something that's real. It's something that's real to me, that the earlier you invest, the better. The earlier that you experience the volatility of investing, the greater the muscle that you will have, that it actually works. That it's time that we shift our mentality, no? That okay lang mag-expose sa risk than to spend our money into things that wouldn't even matter later on in the grand scheme of things. The message still has not changed. In the prime years of your life, you have to spend and put in as much as you can to grow wealth, to build wealth and not buy stuff that you do not need, and not spend your money on things that are not so significant. Put your money first on things that are assets. Put your money on things that will give you value, that will allow you to be financially free. And I really believe stocks, REITs are one of them. But again, do not buy, sell, or hold a stock just because it's talked about in YouTube. It's your money, it's your responsibility, and I do hope that you do your own research right after this. So there, if you guys have any other questions about REITs, put it in the comment section below. And for those who want to know more about me, my videos, my books, my courses are in the description below, which is dedicated to everyone who wants to learn more and do a deep dive into the world of investing. So I guess that's it for now. If this is something that benefited you, I would highly appreciate it if you could smash the like button for the YouTube algorithm. And if you want to get notified with tons of videos that I create about investing, it would be awesome for you to be part of this community by pressing the subscribe button and smashing the bell so you get updated every time I come up with new content about investing. Oh, I forgot to mention this, that we're having our very first Stock Smart Zoom for 2021. It will be at the end of February. The link is in the description below. For those who want to know the rudiments of how you can trade using technical analysis, that's what we will discuss there. I hope you guys got a lot from this, and if you guys stayed up until the end, comment algo. And this is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.